Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Market-wise, let's take a look at it out here. We get the Dow Industrials down 63, Nasdaq's off 9, S&Ps are up 5.5. Gold contract down $4.30, trading at $1,240 an ounce. Silver off 3 cents at $17.43 an ounce. Platinum down 13 at $1,248 an ounce. Copper down 3 pennies at $2.97 a pound. Light sweet crude up 89 cents at $82.67 a barrel. Bonds, we have the 10-year down 16 ticks at 128.02. 30-year off 30 ticks at 143.14. King dollar down 200 ticks at 85.04. The euro is down 41 at 127.97. And the yen is up 27 at 106.19. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So, first off, what we have, the A to B structure here on the way down, folks, is extraordinary. You are talking about 199 point A to B. I suspect we're going to get an ABC structure on the way down. That is the largest ABC structure that we have seen since the downdraft of 2008. Prior to that, the largest one was in 1999, but that was on the way up. That was Qualcomm did a 225 point ABC structure on the way up. Bottom line is that you have the low out here yesterday of 1820 in the S&P. We're in Thursday. Right now, you get a flat market, and I suspect that what you're not going to see is a bounce until next week. And the reason being is that it's going to be really tough for investors and or traders to go home long tomorrow night. So what I suspect you're going to see, if we go over and we take a look at the E-mini right now, the future contract, what you see is that each and every time we've gone up thus far, we're just making it to ICE. ICE is set up at the 1871 area. We made it to 1869. First time we made it up there was at 11:30, and then it gave it back, went down to 1844. We just made it up there about 30 minutes ago. At 1:30 we made it up to 1868. Now you're at 1853. What I expect you're going to see as we come into this close, you're going to see some more selling because the risk is just pretty incredible. Now, volume characteristic-wise, this is what we have. Right now, we've done 712 million. Okay, so that says volume's coming into the market again. Yesterday we did 1.2 billion in the NYSE. Actually, 1.3, I think. 1.2 billion in NYSE. On the Nasdaq, we're already at 2 billion. We did 3 billion yesterday. So the way that S&P is set up, I suspect if we go over to the SPY, we take a look at the SPY. What you're going to see in the SPY is this: SPY. Flat market out here today. Right now it's down 51 cents, but really an inside day. It tried to get over the high of yesterday, which was 187.69. Couldn't handle it. You can make the case already that you're building the B point of an B to C of an ABC structure on the way up, and the volume is already contracting. So I suspect what you are going to have, though, is that we're going to see a little bit more of a pullback tomorrow. And more than likely, you'll see that pullback with lighter volume, and that will set up the structure coming into next week. Dow Industrials. We're going to take a look at the Dow Industrials. What we have with the Dow is this. Dow sideways move out here. You're down 54 bucks. The low out here of today was 15,935. Low of yesterday was 15,855. Nasdaq Composite. What do you have inside the composite? Inside the composite, composite's flat, down $1.50. Composite out here also more than likely will close at its lows or close. I don't expect the low of yesterday. That isn't what I'm looking for from the close tomorrow. What I'm looking for, however, is something that's going to get close to those lower numbers. Gold contract. We take a look at gold. What we have with gold is this. Gold needs some more strength, but she's working her way inside this 1242 area. Right now we're at 1240.50. The number is 1242 on this contract. You want to get inside. What we do have with the gold contract is that you are pushing with volume. Yesterday, monster volume. We got up to 1250. Had 258,000 contracts yesterday. Today we're at 171, and that's good volume today, folks. I like how this is pushing into yesterday's. It's over the 1238, and you have volume behind the move. That is saying that gold wants to break topside. Oil. Let's go take a look at the oil market. Oil had wide price spread out here today, no doubt. Oil got to a low of 79.78. You've done 390,000 contracts. And bottom line, folks, oil's going lower. You know, they can't even get a bounce going. It's pretty amazing, actually. Oil made it to 84.83 and then gave up $2 more. You know, so right now, intraday inside that oil market. Okay, so inside that oil market, you had that big spike, and that's all it was a spike up to the 84.83. And, you know, bottom line, it can't get any traction. I suspect what you're going to see is that oil's going to go lower before it goes higher once again. Bond market. We go take a look at bonds. We start with the 10-year. 10-year out here today, 3 million contracts. And what you're going to see, this is pretty amazing. You talk about contracts. Yesterday we did 4 million contracts. We get to 130.17. Today you do 3 million on a sideways move. You know, bottom line, that's setting up for higher price. You know, what you can have in a weekly now, you can have a daily high volume spike at 130.17. You can have a weekly. You can have a monthly. They're all of the above. We go take a look at the 30-year bonds that we have with the 30-year. Same type of setup. 30-year have done 826,000 contracts today. Yesterday you reached a high of 148. You did 1.1 million contracts. The 30-year, well, the 10 and the 30-year want to go to their highs. That's the setup. King dollar. What do we have with King dollar? King dollar doing an ABC structure on the way down. It broke the B point yesterday. Did it with volume. King dollar right now is trading out at 85.05. And what I expect you're going to see, this baby wants to come down to the 83.95 to 82.95 area. That is going to give the market room to breathe to get into higher price. We're going to take a look at some of the high volume stocks, and we do have a high volume market right now. Apple's down $1.12. We have, let's see, Chesapeake Energy's up $3. That's up 15%. eBay's down $2.29. Netflix is the number out here, no doubt. NFLX, we were talking about this last night. They come out with numbers. Last night it was down $1.25. Right now you're down $88. You're trading at $3.60. And Netflix, no doubt, folks, is a personality stock. Netflix can get hit. And when you look at any of the retracements on Netflix, it always looks like that they're never going to come back to life. If you do want to see how markets, equities, come back to the last time with volume, Netflix is a classic. Netflix hit 331 out here today. You're going to see it 317. That was the October 25th swing low. That's the last time it had any volume. And, you know, we'll see what kind of cause she builds as she gets into that 317 area. Some of the Dow stocks out here, what you have, American Express is flat. That's up 2. You got Oxy up 140, 130. If we go over to the XLE out here is up $1.32. Dead cat bounce, folks. The XLE has come off $100. Went down yesterday, hit 77. You're going up today with 52 million versus down with 69. The XLF, folks, is the number. The XLX is screaming right now, okay? And, whoops, what is that one? Okay, so the XLF, there she is. XLF up 3 pennies out here today. Yesterday, XLF broke lower, broke with 109 million shares. You're doing 71 on the way up. We take this and you put this on a weekly basis. What you're going to see is that on the weekly now, we get high volume lows. We're already at 300 million on a weekly basis, which is taking out 210, which is going into 298. They still have a day left. Bottom line is that you're selling down with volume. Dow Industrials right now down 17. NASDAQ is up 7. S&Ps are up 12. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, you get the Dow down 8, NASDAQ is up 8, S&Ps are up 13. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Hecht. Don't forget, folks, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, Andy has an outstanding show, talking commodities. At TFNN, we start live programming, live content every trading day, 8 o'clock in the morning, 8 a.m. Eastern Standard Time to 6, all live programming. We replay that. You can get all of that programming, folks, right on your cell phone, tfnn.mobi. Andy Hecht, what's going on?
Hey there, Tom. How are you today?
I'm doing great, man. You having a good day out there?
Yeah, doing good, doing good. I wanna talk to you about gold today.
Okay.
Can we talk a little bit about gold?
Let's talk about gold.
Let's talk gold. All right. So yesterday, and I put an article that I wrote in Seeking Alpha this morning. Gold made a very important technical statement yesterday. Made a key reversal on the daily chart, meaning it made a new low and then closed above the previous day's high.
Yes.
And that close, that settlement above the previous day high was 1244.80, which, by the way, was also above the resistance. So very interesting action in gold. And I want to go back in history, a couple of months, and take a look at what happened on a couple of other days where we had key reversals.
Okay.
On June 5th, we had a key reversal to the upside, which eventually took gold from closed around 1254 that day. It took it up to a high of 1347.
Yeah, that's a nice run. I see that chart. Yeah, cool.
Then we had a key reversal on the downside on July 29th. Let me find that one. On July 29th, we had a key reversal to the downside, which actually eventually, although we got a little higher briefly, took us down to the recent lows of 1183.30.
Yes.
Now, yesterday was an important day. So I know I've been saying that I've been short, and I continue to be a little short here, but I have a stop and a reverse stop for a close above 1250, or if the market, starts to really jack up tomorrow on a crazy Friday.
Yeah.
But I think it's very interesting. Gold at a very key level here.
Well, what was intriguing yesterday, no doubt, is that the price spread in gold yesterday, folks, was 1222 to 1250. But for the disaster type of day that we actually had, it held up really well. I mean, it did. That's the reality.
And look, I picked these other two key reversal days in the last couple of months as an example, and we both know that right now is a lot different than it was in July and August, the market.
Yeah, and, I think, if we get another wide price spread accelerated volume, and the dollar's doing an ABC structure down inside, a much larger move to the upside. So it should give the metal market room to breathe.
We'll certainly find out here, but it certainly looks good. Technically, it looks very good, and it is building cause here. Quiet inside day today. One interesting thing, the commodities, the group of commodities that really started the big sell-off here were the grains.
Yes.
And the grains have been bouncing. And one of the things I think I want to, kind of point out to the listeners here is that soybeans have been going up a little bit the last 2 weeks. Corn's been going up. Wheat's been going up. I view this as a risk-off trade.
Interesting.
There's a lot of shorts in those markets who are getting obliterated in other markets, and I think that the crops are great here, but these markets are going up because there's a certain amount of de-risking going on.
It's interesting here, Andy. I get the soybean chart up, right? Mm-hmm. And, this is a good-looking deal, man. I mean, folks, it's a good-looking deal now. What has happened is that the thing gets smoked. And I happen to like these, though, because two different things end up happening. Even if it's a dead cat bounce, you get 1042 in it. It's like, that's a huge move.
Oh, absolutely.
You know what I mean?
It can go.
Yeah.
No, I don't disagree at all. And, Tom, it's got the fuel for that because it is short. We got 809,000 contracts of open interest in this thing. And by the way, that is significant in beans. And I think that of all of them, beans are probably the one that have the most upside because they have the largest speculative short position in them. And when the proverbial you-know-what hits the fan, these funds take risk off, and here's risk that's on. I mean, they have a lot of money in this. They've ridden it down through the summer from $12 to we're in the 9s here. There's a lot of money. When you're covering losses and you're clearing the decks, the profitable stuff is the first stuff to go.
There's no doubt. There's no doubt, man. Yeah.
I mean, that's just common sense, right?
What happens, what you're hearing off Andy, folks, what happens is that when you're on a desk or you're really running a lot of different vehicles at the same time, that's exactly what you do. You look across quick and say, okay, take. And then that does two different things. It helps your losses. Number one, you can breathe. You basically have a different attitude, and then you got to start, and it's easier to basically get rid of the dogs. You know?
That's exactly right.
Yeah.
Now, I think one other commodity is telling us, really reflecting what's going on, and that's copper. And copper looks lousy to me.
So let's
we
bring
rallied
this
up to up to 310 on Tuesday when the Chinese cut interest rates. But that, not only did we sell off, we sold off through $3, which is a key psychological level here. We're going after this 288.45 March low, and I think we're going to go through it.
Yeah, copper's an ABC down. Let me pull this up. HG1. Look at that. Yeah, we got an ABC down extraordinaire. Let me see. So I'll put it on a 2-year weekly.
And there's nothing better than an ABC down with the fundamentals behind it. Look, copper, the Chinese will come in and buy copper on a big dip. But when in these types of market situations, copper is the bellwether commodity for global growth. And when you're running into problems with growth, you see it in the copper price. Man,
this is what Andy's bringing up here. This is pretty intense, folks. So check this out. Copper hasn't been this low since September of 2011. A break here gets you into that 272 in a heartbeat, man.
Oh yeah.
Wow.
Oh yeah. It's an ugly chart, and it's kind of an ugly market. And the other base metals are telling us, look, lead made 17-month lows today. Nickel's giving it up. The only thing that's really hanging in there here is aluminum, because production has been cut. Alco has cut some production and some smelters. And zinc, where there's a fundamental deficit, is there's some strength behind there. But the others look weak here. The others look weak, and copper leads that complex. And Tom, with oil doing what it did, copper, it makes sense that copper's weak, and copper is the bellwether.
Man, if you're watching Tiger TV, folks, I just set up what copper has. Now, check this out. So, the market, folks, in life in general is made of triangles and boxes. That's all. If you're not, head's not wrapped around geometry, it's kind of fun if you have children wrapping around geometry, because and in that context, okay, so in a technical analysis context, this is as classic as you can get. And this is what you have, folks. In many triangles, the way it works is that if you break out of the triangle prior to the end of the triangle, most of the time it's a false break. So if you break topside, you're going to end up going back inside it and you break downtown. When you break at the very end of the triangle, which triangles take forever to basically lay out, that's where it's going. And this triangle did take from August of 2010 to set up. So this is.
I've seen this thing halve in price, Tom. This could be ugly.
Yeah, no, it could. Stay right there, Andy. This is Andy, Tom O'Brien. We want to hear from you, folks. Our phone number is 877-927-6648. Dow right now is down 10. Nasdaq's up 10. S&Ps are up 12.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. You get eBay down at $2.10. And eBay, folks, just basically broke apart everything going back from November of 2012. This sets up, not dramatically low. Yeah, well, $45 to $38. Big number. And Andy Heck, we're talking commodities right now. Don't forget, folks, right after I end at 5 p.m. Eastern Standard Time, Andy comes on at 5 to 6. And as we're looking at commodities, let's get a little sweet tooth going. What do we think of? What are we doing with sugar, Andy?
Yeah, let's look a little sugar, because sugar's interesting here. Listen, this commodity has been a dog for a long time.
Yes.
You know, it's been a sale, and sugar traders are used to selling every level, but I'm seeing a couple of things here. First of all, open interest is at 761,315 contracts. That's the lowest since 2012.
Okay.
Okay? It kind of bounced off the 13 and change level. We're up at around 1667. There's not a lot going on now. But on the fundamental side, Tom, lower oil prices means that Brazil, the largest grower of sugar in the world, that uses a lot of sugar to make ethanol, will need less sugar for ethanol next year. And with the prices so low, that means that probably they will cut back on sugar production. Now, the Indians and the Thais, who are also large sugar productions in unsubsidized countries, have been complaining about how low sugar prices are and have said that they're going to cut some of their crops back in the coming year. This will set up us going from a glut market into a deficit market. And I think that we're kind of at the beginning stages here. Now, this is not a short-term call here. I think that, as we get into next year, into 2015, sugar can be a very exciting commodity. So I want to keep our eyes on that and maybe start, nibbling at some call options out in July next year and next October.
So your theory is that Brazil, which is the largest grower, they would cut back because they can't get as much money doing the ethanol, right?
Exactly.
That's a little counterintuitive, but I see what you're saying. Okay, right.
They'll cut back the crop, and then there won't be as much around next year. I mean, this is the way commodity economics work.
Sure,
when oil prices are real high, they'll grow lots of sugar, and they'll process it into ethanol.
Right.
Now, oil's cheaper.
Right. No doubt. I can see that. You
got to look a little bit further out with some of these things. I mean, it's been a dog now, and chances are it's range trading. Watch that 18-cent level. I mean, that's important. But the speculators will get in far before the curve, in terms of the market going from glut to deficit. And I think that's very possible here.
So let's go over to natural gas.
Natural gas.
Yeah.
All right. 3 things going on there. We got 3 things going on there. The first, warm weather.
Yes.
All right. Second, large injection today, but we're still about 10% below last year, 9 and change below last year, 9 and change below the 30-year average. It's all the weather now, Tom. You get some cold reports, this thing will go up. You get warm reports, we're going to probably languish around these levels. I think that this is still in a trading range, 370 to 430. On a fundamental basis. Technically, it doesn't look that good. It looks like it broke down a bit today. We made a new 11-month low today. But, something tells me that we're trading around 380. I don't think we're breaking down below 370. I think we're closer to the buy zone, certainly, than the sell zone here, in my opinion.
Well, it was cool today, and it did break out of its range, folks, okay, but it only did it with 96,000 contracts, and it's right back inside its range. I happen to like those spikes when that happens because realistically, folks, what you have is that it's operators looking for stops below it, and they couldn't find any. That's the reality out here today.
And let's stand back and look at it in the macro sense here. It is part of that energy sector here.
Yeah.
It's holding pretty well considering what its cousin oil is doing, that's for sure.
Well, yeah, I mean, let's talk oil. I mean, because, I can tell you, Andy and I were just talking, we were talking a little bit earlier today on the phone, folks, okay, and oil is bouncing, but Andy, what this looks to me, I'm not kidding, this looks like it still wants to go to 77, 75,
absolutely. Yeah. I think it extends on the downside, and I think we see it. Actually, where I peg support here, Tom, is at 74.95. That's that low from a couple of years ago.
Yes.
That is all important to me. But I do think it's a managed situation here. I think it benefits us, the Saudis, and it's against Mr. Putin and some others. And I think that it's a powerful political weapon. And we can't forget that about oil, because oil is, it's a commodity. We all use it. But it's also the most political commodity of all.
Yeah. Oh, there's no doubt. And, the low of 2012, which is 77, is wide open, man, for a test.
Absolutely.
There's no doubt.
Absolutely. And I'm sure we're going there. I mean, this is ugly. This thing doesn't end here. And we didn't put in a low today, and now everything's happy, and we go back to $90. I can't see it. The Saudis are pumping a lot of oil here. There's a lot of oil around. By the way, that curve is at flat. Brent WTI is at $1. I mean, it's not just the oil price.
Right.
The whole structure of the market has been flipped over. And you and I, over the last 6 weeks have been, we've been talking about that, how the curve has been flattening. That says there's no supply shortage. There's lots of supplies around. The Brent TI has come down. That means the political premium on oil is off. And kind of we saw this coming.
Yeah. Oh, listen, man. The thing that's amazing, folks, if you do, there's a couple editorials. There's one editorial. It's either in the Journal or the New York Times today. And what it's about is basically we're using oil to basically, squeeze Putin. And well, the bottom line, folks, is that if you listened to TFNN, you would have got that a month or 6 weeks ago. Easy pickings.
Absolutely.
Yeah.
Absolutely. I mean, it's $80, 75, 85 range on crude is the best of all worlds for the U.S. and for the Saudis here.
Yeah. Yeah, put everyone else out of business.
And it's the worst world for, and by the way, and for the Chinese, and it's the worst world for Putin.
Yeah, exactly. And that's the way to break it down. You can't start wars, folks, if you don't have any money. That's the bottom line.
That's exactly right. And, we go down, we break down through 75 to 50 to 40. There's only one winner there, and that's China. And I don't think the Saudis and the U.S. are going to let that happen.
Yeah. Well, that's if, in fact, when you get fast markets, can anyone handle, what you're asking for? Not you, I'm saying the market. What ends up happening, folks, is always dangerous. You better make sure you know what you're asking for.
Right, exactly. That's exactly true. But right now, it's a great year for consumers. You could drive your car. You heat your home. It's a beautiful thing. And by the way, eventually, this is not a negative for U.S. equities. Eventually, energy costs are going to go down. That's going to increase earnings.
Oh, yeah. Listen, there's no doubt. And the same, this is the perfect setup, folks. And I'm sure, I'm speaking to the choir, anyone that lives in the Northeast or, in the Midwest, because your bills, you're really going to save it's going to be real money this year. You're going to save $1,000, $2,000 between your gasoline bill and your heating bill. I mean, because...
Absolutely right.
Yeah, which is just dynamite. I mean, that is big dollars.
And you feel it every time. Here where it's warm, you feel it every time you go to the pump. Every time I go to fill up my car, it's lower and lower.
Oh, listen, yesterday I filled mine up $67, and it was.
By the way, Tom, it never goes down quite as fast as it goes up, does it?
I know. There's no doubt about that. They as one of our Tigers used to say, "Goofy Golfer." That was his nickname in the den. I remember him always putting the ladders up on the way up, and they never could find the ladders on the way down, man.
That's right. They take the slow escalator.
Yeah.
And someone in the den is also saying, that the increased production also hurts Venezuela very much.
Yeah.
And it also hurts Iran and puts more pressure on them in these nuclear non-proliferation talks that are going on. So there's a lot of positives with the oil price around these levels.
Oh, yeah. There's no doubt about it. Absolutely, man. No doubt about it. We had out here, I'm just going to switch gears on you for a second, Andy, all right?
Sure.
What we had out here today, folks, is that you had Apple unveiling a new iPad, but what had happened there is that Apple, by mistake, actually put it on their website yesterday, so it wasn't nothing to unveil. Apple's pushing into the lows of yesterday, and guess what? Apple's going to break down, folks. It's going to be interesting watching this baby shake out.
Along with a lot of other stuff, huh?
Oh, you're going to have some good action today because you get the commodities going. You got Google coming out with numbers after the close. You got SanDisk. You got Capital One. So,
lots of action.
Lots of action, baby.
One other thing that I wanted to cover before I get off is cocoa. Cocoa saw some selling today.
Yes.
Down $60 a ton. I am so bullish on cocoa, and I'm using these opportunities, these sell-offs, as an opportunity to buy. It would be naive to think that the two largest cocoa producers in the world, the Ivory Coast and Ghana, don't have some Ebola, and that's going to affect that crop.
There's no doubt. There's no doubt. Andy, have a great one. Have a safe one. Look for the show at 5 today. Thanks, man.
Take care.
You stay right there, folks. We're coming back. Dow down 17, NASDAQ up 7, S&Ps are off 9.5. Going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now down 15. NASDAQ is up 9. S&Ps are up 12. You get a sideways move, folks. You get some volume behind the move. What does that set up? I expect what you're going to see is that you're going to see the same type of market out here tomorrow. It's going to be pushing into lows. I don't expect it will break the lows tomorrow, but it's going to push into there more than likely with lighter volume. The reason being is that what you have here with the type of energy that it takes to go up or down is extraordinary. In this case, it expended a lot of energy going downtown. We did 1.2 billion shares yesterday. Today, we're going to line up at about 900 million on the NYSE. You take a look at the NASDAQ. The NASDAQ, we did 3 billion yesterday, 2.3. Thus far today, we're going to do 2.5, 2.6. And what that sets up, folks, is you have a large amount of energy on the way down. It'll probably go into that again tomorrow. And bottom line is that I suspect that people are not going to want to go home long on a speculative basis, that's for sure. After the close out here today, tonight, we're going to get some real action. Google is going to be the action out here tonight. Google is down 270 right now, trading at 538. They're coming out with numbers. Now, it's going to be really intriguing with Google is this. So if we take Google right now and take a look at where she is, what you have is that Google has just come down from 605 to 538. You have a high volume low at 511. So Google's saying, hey, guess what? You can go to 511 in a heartbeat. That's on your daily, right? We put this on the weekly. The way the weekly is set up is that she also is coming into the lowest swing point at $511 from May 2014, and she's coming in way too much volume. Now, this is without even being open tomorrow and without the volume that's going to basically come in the market after the close today and tomorrow morning. So watch this. You've done 12 million shares thus far, and you're going into 12 million. And we have, of course, a few minutes left in the trading day today, 7 minutes today after the close, and then you get all day tomorrow. So what does that set up? Well, when we bring this back, and I put this on 2 weeks, what you're going to see, 2 years rather, what you're going to see, the setup there is, there it goes to, there it is, 2 week. The setup there is that when Google had really sweet earnings last October, it went from 433 up to 506. Bottom line, folks, 506 to 433 is the number here. So this is going to be wild watching this because the way Google comes out with its numbers, they come out immediately. And it's going to be, they have this clock timed down. The split second at 4 o'clock, you're going to see Google come out. And what's so intriguing about that, it wants to, technically, my take is that it wants to get down there. But fundamentally, the market is way over extended, no volume. I feel the market wants to go down a lot. But when you look at the aspect of advertising inside the Google marketplace and what they're doing, they should be doing pretty good. But technically, guess what? It's saying it's going lower. So these are always great days to really dissect and bisect them before the fact. The only way that you can basically get higher probabilities going, folks, and when you're doing technical analysis, I learned this a long time ago, you absolutely have to make a decision before the fact as to what you think is going to happen. The reason being is that sometimes it works, sometimes it doesn't. Then you bisect and dissect it after the fact and take a look and say, okay, did you miss something? Where is that? And if you do that over and over and over again, you'll get to see many subtleties that are in the market that absolutely do give you clues as to where the buying and or selling is, and so where the true supply and demand is. That's the key. If we go to SanDisk, SanDisk, folks, bottom line. So this is going to be a great one to watch, too, because SanDisk's an ABC structure on the way down. First leg down, 108 to 91. Now you're at 85. You know, it broke it with volume, so you got what? 108 to 90. So you get 18 bucks, which gives you... Oh, we're already below that. Interesting. So it already did its A to B equals C to D. So SanDisk, you put this on a monthly basis for a second. I'll put it at 5-year monthly. So on a 5-year monthly, where the heck's that want to go? Well, we'll find out. 70 bucks. We're at 85 right now. That's the way that's set up. And then, you know, so that's going to be, and Capital One, COF. Capital One's going to be coming out with numbers. Capital One is trading down 60 cents right now. Capital One is pushing lows with volume. And, yeah, listen, Capital One wants to trade lower, too. So we're going to have some real action after the close out here today. And we'll see how the rest of these line up. Capital One right now, 78. Capital One shouldn't get killed that much. Capital One going to be down $2 or $3. Goldman Sachs out here today come out with numbers getting smoked. You know, that's pushing down 470. And Goldman Sachs actually has more volume today than it did yesterday, folks. Yesterday it had volume of 6.3 million. You're doing 7 million. That means you're pushing volume on the daily. You're pushing volume on the weekly. And on the way the weekly is set up right now, Goldman wants to run down to 163. Right now we're at 172. So we're going to see a lot lower prices, you know. And this volatility, folks, is not going away. What I can tell you on a basis of how folks are talking on the financial stations, you're not going to get a real good bounce in this market until folks are basically, you know, saying not to buy. On a continual basis, that the whole mantra is still buy, buy, buy. In fact, a guy come out from Fidelity, say, in London, saying, I got to read this one. This one's a trip. This one's saying, I've been waiting for this. I'm buying now. Well, let me tell you something. You know, I can do it the next hour. I'll bring up some of these equities, and Fidelity's huge. There's no doubt about that. But the bottom line is that I'll bring up some of those equities that have got smoked, and you know, and they're inside those Fidelity funds, and guess what? They're getting smoked in an extraordinary way. This guy from Fidelity was claiming that it was the hedge funds that were getting smoked. Well, bottom line is that it's not even close. Okay. Well, listen, I don't know what the hedge funds are getting smoked or not, but I can tell you from the filings of pulling up inside the equities that, you know, Fidelity's one of the largest owners of almost just about every equity out there. You know, as of last Monday, never mind this week, as of last Monday, in the equity market, folks, 1.3 trillion was lost in value. You know, so you can take it from there. You stay right there, folks. We're going to be coming right back with Google's numbers. Dow right now, down 38.9. S&Ps are up. NASDAQ is up 3. S&Ps, man, it's a trader's paradise. Up 9. Volatility's here, folks. Here for next year, year and a half. You stay right there. We'll come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote from someone unknown. Dare to believe. Market-wise, let's take a look at it out here. We had the Dow Industrials down 24, NASDAQ up 2, S&P's, where is she? They've been all over the place. They're up 5.5. Gold contract down $4.40, traded at $1,240 an ounce. Silver off 6 cents at $17.39 an ounce. Copper down 2 pennies at $2.98 a pound. Light sweet crude up 91 cents, trading at $82.68 a barrel. Bonds, you had the 10-year down 18.6 at 128. 30-year off a full point at 143.10. King dollar down 206 ticks at 85.03. The euro down 38 at 128, and the yen trading at 106.37. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P. Low today, 1835. Low of yesterday was 1820. Bottom line is that what you're going to see here is that you're going to see, we go over to the futures market. We take a look at the futures. With the futures that GCZ4. What the future market did out here, not ESZ4. Future market out here today, folks, got into a low of 1815. The low of yesterday was 1813. What I expect you're going to see is that it's going to challenge that low out here again, more than likely tomorrow. I don't expect it will break the low tomorrow, but what I expect you are going to see is not a bounce going into the weekend. That's the way this is setting up right now. If we go take a look at Google, Google just came out with numbers. Google closed at 536. It's traded as low as, I've seen it as low as 505. Right now it's at 523. We take a look at what the numbers, what they're saying with numbers-wise. This is what it is. Their estimate revenue, let's see, is that third quarter or second quarter? Okay, earnings per share, the estimate was $6.53. They made $6.35, so they missed that by 20 cents. The top line, however, they missed that too, 13.1 billion. They took in 13.17. 536 was the closeout here. You're at 527. You can expect Google to continue to basically go back and forth and to end up at a lower price. Why? Because what you do have out here that you had a high volume low at 511. It's already got into that level. Once you get into that level and you had high volume, it's like, okay, man, that's where you're going. What should stop it, and what has stopped it thus far, is when Google went up, folks, in October, the high of that wide price spread accelerated volume was 508. Now, it dug into it. When you start digging into it, okay, a little different, but bottom line, that 508 is the number you want to watch. SanDisk, SNDK, SanDisk just come out with numbers. SanDisk closed at 85.31. That is trading at 86 right now, up 70 cents. That had been down $1, so that's going to be all over the place, too. SanDisk, numbers on SanDisk go like this. Their revenue was up 7%. Their earnings per share was $1.45. The estimate was $1.33, so they actually had a better number by 12 cents. They see, let's see, they closed at 85.31, and right now you're trading at 85.97. Capital One, COF, Capital One, that closed at $78.53. That is trading right now at $77.30. That is after already coming down from $84 the beginning of this week. And let's see what Capital One is saying right here. So Capital One, the earnings estimate was $1.94. They made $1.94. Their Tier 1 capital is 12.7%. Their provision for credit losses is $993 million. Wow, imagine that, $993 million. Man, oh, man. Bottom line is that, the financials, what you have in there is that you're getting lower price, higher volume. All those financials want lower price. Gold contract. We get over and take a look at gold. What we have with gold, folks, is this. So those are the earnings. We will go back to those also. Gold contract right now is at $12.40. We did 174,000 contracts out here today. That is building cause for higher price. Coming into Friday, you expect more volatility. Inside the gold market, folks, it's going to be really intriguing to see if, in fact, we can get up only a few more dollars. You get up a few more dollars inside gold, I'd like to see it get into the 1242 area with conviction. That would mean that you'd close somewhere around 1248, 1250. You get that action going, have an explosive week next week. Bond market, we had with both the 10-year and the 30-year. They backed off today. They backed off with lighter volume. And what you are going to have now is you're going to have higher highs with volume. Markets don't end when you get higher highs with volume, folks. Bottom line, bonds want to go higher. Yields are going lower. Right now, the 10-year is at 2.159. It got down to 1.9 something yesterday. King Dollar. We go take a look at King Dollar. What you have with King Dollar, that's doing an ABC structure on the way down after expanding up from June. Actually, even May. Well, it was nonstop from June. June 30th, we were at $79.90 on the index. Goes all the way up to 86. Now we've done back down off 86. We're at 85.03. And you broke a B point on the way down. You broke it with volume. I suspect what we're going to see here is that this is going to basically come down to about the 83.90 to the 82.95 area. And what that will do is that will give the metal market room to breathe. Let's go take a look at some of the international markets. FTSE first in London. What the FTSE did in London, flat market out here was down 15. Huge price spread, folks. The FTSE out here today had a low of 6,072, had a high of 6,282, and closed at 6,195. That little baby, bottom line, let me put this on a weekly because, yeah, she broke down the swing low 6,023. She's going to go right after that. That's June of 2013. If I put this on 3 years... Yeah, so check this out. The FTSE, folks, is going to tell us a huge amount of where this market wants to go, our own markets. I'm speculating this thing wants to go to basically 1380 before, you know, and that's going to take a while. I'm not expecting that next week, but I'm expecting that before we get to higher highs. So the FTSE is generating right now saying it wants to get down to 5362. You know, it's ready to break everything going all the way back from January of 2013. We go to the DAX in Germany, and the DAX, we take a look at the DAX in Germany. What we have is that the DAX in Germany put this on a 2-year weekly, and the DAX in Germany already broke everything. Yeah, the DAX in Germany, that is back to September. Actually, this is pretty wild. 85. Yeah, the DAX in Germany is back to May of 2013. The DAX in Germany has another 500 points down. So this is pretty intense. The DAX in Germany is at 85.82 and looks like it wants to trade to 8074. So it's a big number. Huge number, actually. GOOGL. Let's see how Google's doing out here. Google's at 522. She's not going to be able to get any traction. SNDK, SanDisk is at 83.58. She's not getting any traction either. She closed at the 85.31 area. Some of the high volume stocks out here, and we do have a high volume market now. Apple was down $1.28. You had GE was flat. Comcast was down 126. Let's pull up Comcast. What is going to get intriguing here, folks, is the aspect of these cable units. Are they going to be able to have to change their MO? Because what's going on is that there's plenty of people that are basically disconnecting the cord. Yeah, Comcast is down with volume. This is going to be problematic. Man, oh, man, look at this. We're going to be saving money, folks. We're all going to be disconnecting this cord, I think. I've been going back and forth. It's like, what do I even need it for? You know, but now what's happening is that CBS is coming out with a streaming service. You can get 15 different series for like $19 a month. HBO is going to do a different series. These cable companies, guess what? I think we're going to attach the cable. It's Tom O'Brien. It's the TFNN. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we had American Express down 69. You had Oxy up $1.19. IBM was down 143. Johnson & Johnson was off 143. You had Walmart down 138. Let's go look at Walmart again. Walmart was down hard yesterday. And Walmart very well could be this canary in the coal mine, folks. This is going to be interesting watching this shake out. The reason being is that when Walmart had broken out, it was in a 12-year consolidation. And if it gets back inside 70.25, that'd be huge problems. Because that'd be a total breakdown. Let's go to Dusty in Nashville. Hey, Dusty, what's going on?
Doing good there, Tom. How you doing?
I'm doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
Yeah, I wanted to ask you, can you take a quick look at IWM for me, please?
IWM. So IWM, folks, is the iShare Russell 2000. The low for the year out here is 103. The high is 127. Okay, so let's take a look. So what are you trying to do here? You playing a dead cat bounce, or what are you doing?
I'm actually in it short, but I'm kind of a holder. I'm shorting it via the TZA, but I've been in it for a while now, so I've been kind of riding it and looking to see if it's going to bounce much more or if it's going to go down. And so.
Okay, so you didn't take any money yesterday, huh? Okay. Okay, so when you say you're riding, I mean, how long do you plan on holding this TZA?
Well, to be honest with you, I'm not entirely sure. I've been looking to, I'm not in front of my charts right now. I had to go away from the desk so I could talk here, but...
okay, well, let's go through this, okay? So the TZA, folks, this is the direction 300% inverse correlation of the Russell 2000. And, you know, the Russell 2000, you know, has just gone from, if we use the IWM, we went from 120 down to 103. If we go over to the TZA, the TZA had a nice expansion, just went from $13.50 to 19. It pulled back. Now, what happens with these leveraged products, folks, is that they're daily investment vehicles, and they reset themselves every day. What I would do, Dusty, with that TZA is that I suspect, you know, you had it go down 63 cents today, not the end of the world, you know, after that nice uptrend. I would move that baby out, you know, before the weekend, because what you have is this, okay, is that the expansion down was huge in the small caps. And you're going to get some kind of a dead cat bounce, you know, that the IWM, I suspect, you know, I think you'll be all right tomorrow. I mean, I think it's going to basically go slightly lower tomorrow. Not a lot. You know, went up $1.20 today. Maybe it gets down to, you know, like 107 tomorrow. So you're down 80 cents or something. I don't see it breaking a low, okay? And then what you'll get is that you'll get a bounce, and the IWM will probably go to 109.86. And then what you do is you sit there with your hands in your pocket until the TZA basically tries to get, you know, gets back inside the 1675, 1586, something like that. And you can fire it off again. You're going to be able to be trading this for quite a while. But you have to move them, man. You can't just not move them. And, you know, that's just not how they work on a mathematical basis.
One thing that's working against me is that 3-day settlement rule that I've got with my broker. But, yeah. Well, do you see the bounce in IWM having much more than 109?
I do not.
Okay.
Well, you should go to Thinkorswim. You shouldn't have. No one, folks, should have a 3-day settlement. Just so you know that. If you have a broker deal that's not giving you money on a 3-day settlement, go get another one. Go get Thinkorswim. That's insanity. That you know, that's absolutely insanity. Seriously, man. You know, it doesn't cost any money. You can go to Thinkorswim right now. Costs you nothing. $0. Transfer the money over there. If you sell that, you get your money that day. That second. You turn around and do it.
Okay.
Okay, man. Have a great one.
Take a look at that. Thank you very much.
Okay, have a great one. Have a safe one. Let me go over this, folks, for you, just in case, and I'm sure there's other people out here with the same deal. So years ago, there was a 3-day settlement rule, and I'm actually going back. I think it's probably over 25 years ago, the last time I ever had a deal with a 3-day settlement. Maybe it's 20 years, okay, but it's not that long ago. And if you have a broker that when you sell something, that you have to wait 3 days in order to get your cash to move it again, get rid of them. That's the bottom line. Absolutely get rid of them. Because, you know, you can go to Thinkorswim, open the account. Doesn't cost you anything to open the account, folks. And, you know, that's TD Ameritrade. They get billions of dollars, okay? Great broker-dealer. And if you sell your stock, like, right this second, you can use your money that second. We're not even talking about 30 seconds, okay? So as soon as you sell it, your money's in the account. You can do it again. Now, when you start talking about these direction shares and the pro shares, you absolutely, you know, when Dusty asked me, the second part of his question is that, okay, where do you think the IWM can bounce to? And where I'm going with that is that it can bounce to August 1st, the low of August 1st. So, unfortunately, what he's going to think now, but he listening to me, Dusty, okay, so I'm going to explain this, is that, okay, So it goes up to that. So he's trying to figure out in his own head, okay, I can take a little heat. Okay, so I want to give you the good scenario and the bad scenario out of this, right? The bad scenario, let's do the bad scenario first. The bad scenario would go like this. The bad scenario, you go to 109. So at first you think that, okay, I can take that heat. Then, folks, if we have a sideways market, if the market goes up and down for, let's say, 2 to 3 weeks, right, in a consolidation, if you have a bullish position or a bearish position in any, this is 100% one, any of the pro shares, any of the direction shares, any of the leverage products, they all will lose money. The reason being, and that's why you got to wrap your head around this, that they're daily investment vehicles. Now, okay, so that's the worst case scenario. The best case scenario would be that, you know, if we go back to the TZA again for a second, or the IWM, what would end up happening is that you get the bounce up to this 109, and then you start the C to D leg of the ABC structure on the way down. You got to remember something. If you have my book, The Art of Time in the Trade, your Ultra Trade Mastery System, you know that an A to B is a straight line move. The B to C, okay, basically is a consolidation move. It goes all over the place. Once the C to D starts again, it's another straight line move. And this IWM was about as straight as you can get. On the 2nd of, no, the 3rd of September, you're at 117, and it just went straight down to 104. So bottom line is that you have, what's that, 13.8 to B, which is a beauty. Because then if you go to the 109, you just take 13 points away from that, you know, you're going to end up at 96. You know, so if we take a look at where 96 is, you put this basically back 3 years from now. Yeah, and see, this is screaming out here. So, oh, look at this. This is, actually, the next move probably is going to take you down to 93 or something. Yeah. Oh, there it is. No, right there. Yeah, 95.73. There's action there. Bottom line, though, come over to our website at TFNN. Go, you'll see ETFs across the top. Hit that. There's a couple white papers that how leverage products work. Please read them, folks. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. Now, Bond, brilliant trader in the den, just came up in the... He's explaining that we have the TLT is going to have the most volume since the first 2 weeks of August 2011. Check this out, folks. This is pretty intense. Now, check this out. Mark, this will blow your mind. Okay, this is going to blow everyone's mind. But watch how this shakes out. This is like insanity. So the TLT is the 20-year plus bond ETF, right? Now, what it did, you know, if we take this 20-year and we bring it across. Now, I'm not taking the peak, but this is how I do price projections all the time, folks. Okay, when you've had something on a very long chart like we're talking right here. So when you take the TLT, and I take what it has gone into, and you get yesterday. Well, today it goes to yesterday it went to 127.68. Today 124. You have the volume, so it blew away all these swing points. Well, what you do, this is crazy. What you do is that you just take the top of that swing, which is 124.26. Then, now this is on a long-term chart when you do this. Then you take the bottom of it, okay, which is 101. So you get $23. Well, you add $23 onto the $24, folks, okay, which is, I know, is insanity, because you're talking about a 148, and the high that was generated thus far, okay, is 132. So, so what does that do? Okay, first off, your probabilities go up dramatically that we're going to go to the high. My take is we're going to the high. What is more insane is that price projection is saying we're going to 148. And that, yeah, there's no doubt. There's no doubt. And as Mark says, and he knows bonds upside down, folks, that would put the 30-year bond, so check this out, the 30-year bond right now, the 10 years at 2.1, the 30-year bond right now is at 2.9. That would put the 30-year at 1.5. Hold on to your hats. This is gonna be wild, just watching this shake out. Let's go to Paul in Bonita Springs. Hey, Paul, what's going on?
Yeah, good afternoon, young fellow. Listen, I've got to ask you, you're getting enough sleep at night. You called the market. You were calling the market to go down for several months now. And here we are at new highs.
We're at new highs?
Aren't we?
I guess not. Yeah. Okay, have a great one, man. Have a safe one. So go back to bonds for a second. Maybe that's what he was talking about. Yeah, the bonds are going to be at new highs. I have no idea. But anyway, and you know, and there's no doubt. I want to go back to this TLT for a second because that is insanity, folks. And no matter how bullish you can be on bonds, that is insanity. But watch. Okay, so I'm going to walk you. I want to walk through more of this because what happens is that as we're moving up or down, you can get clues whether, in fact, this will come to play. So this is how it works, right? On a weekly basis thus far, we've done 72 million shares, right? And what ends up happening at 72 million shares, we still have tomorrow. You know, you're coming into a swing point. Now, you have to take the highest swing point. When I bring this back, I'm going to take the swing point going from June of 2012, and that was 75 million. So we're going to do over that, okay? So what does that do? Though that says that we're at 121, and that says that the TLT wants to go to 132. So that's on the weekly basis, right? We turn around, that's a 3-year chart. Now you're going to put up a 4-year chart and say, okay, we're still at the 132, that's where it wants to go. We go to a 5-year monthly, and on a 5-year monthly, and this is important, this one's a big one, on the 5-year monthly, we had hit a high of 131 million shares. Well, we've already done 148 million shares. So that is saying we're going up to the 132. We take this back, and we take it back 10 years, and let me just see how this is set up. Oh, this is a mind blower, man. The more I keep looking at this, the more it's telling me that, guess what, this is going to fly. Unbelievable. Okay, this can fly. Hey, we'll see where this shakes out. But the way that this is set up right now, we're going to get to the high. If we take out the high, you're going to see it much higher, not just a little higher. You know, so low rates equal what? Low rates equal lots of cash and real estate going through the roof. Let's go to John in Winchester, Mass. Hey, John, what's going on?
Hey, Tom, how are you, my friend?
I'm doing great, man. You having a good day out there?
No, it's raining out here in Boston.
Oh, bummer, man.
I'm jealous. But, yeah, I got a couple of questions. One is I want to do, you were dead on about MU, Micron Technology, when I called you a couple of weeks ago.
Okay.
And I want you to see what you think. You think it's going to hit 30 before it starts to retrace again? At that gap?
It looks to me like you get a nice ABC down here, man. You know, Micron Tech, folks, has just come off the high of 35. It's at 28. And what's sticking out like a sore thumb is at 24 over there. Here, I'll bring this up back a year. Yeah, that high volume right there on April 4th. That's 24.85. You know? So
Okay.
it looks to me like a sweet little ABC structure on the way down. And in
Isn't there
fact,
a gap at 22?
oh, listen, I'm just giving you the next stop. The way Micron is set up right now, 24.50, that's on the weekly basis.
Yeah.
That's game, and if I put this so I can find these gaps for you. Yeah, it looks to me that, yeah, you get a bunch of little gaps there. Yeah, it's going to go after them, man. I mean, the thing is wide open to go after them. And what Micron had done, folks, okay, this one was a classic because with Micron, it had spiked higher, had volume one day, and then gave it up at the highs in a dramatic way. It came off the, the first high in Micron was in July, and then that high was established on a daily basis with 30 million. Then it came down with 64. But guess what? It went all the way back up, folks, and it hit the high of 30 with 33. And you see that. But in this case, bottom line is that, yeah, it tested it. And the correlation there, by the way, folks, you take the two highs at 30 and 33, and you take the spike lows. And the spike lows was 64 and 37. And then, of course, when it blew apart out here with 85. So.
So where should I put my stop? I'm thinking of shorting it again.
What I would do is this. Hopefully, it'd be really sweet if you could get the place to short this again. It would be, you're at 28.30. Would be at like 29.87, man. You'd love to see it get up there and test it. Do you know what I mean? And more than likely, you're going to see that. I'd just sit there and wait. Because you have two different things there. You get that gap that's up there, right? They want to gap down. And that's where all the lows were set up also. So that way you could put your stop on the other side of $30.41. You're shorting it at $29.80. And then you're going, though, for that ABC structure on the way down. And your A point is $34.85. Your B is 26. You get $8. And if it gets into that level, you got, you get 22. There it is, man. You get $22. That's the setup, man.
Okay, as far as the other quick question, the semiconductor index, is that showing like it's doing all of them are doing ABC down?
They are. If we go over and look at Intel, they are. And the semiconductor index, folks, it had held up really well. It did a long top. And when you do long tops like this, and then you break apart, that was distribution at the highs. All of the above, the index is, look at Intel, man. Intel's a monster ABC down. You gapped away. Intel couldn't even hold the price today. Do you know what I mean? That's how it likes to trade. Texas Instruments, TXN, let's go over to Texas Instruments. And Texas Instruments led it, man. This is pretty amazing, actually. Texas Instruments on a weekly... Oh, man, that's a disaster. So Texas Instruments is at 43 and wants to go to 39. It's only $4 more, actually. So that's one to watch, actually. It's good, John. What you want to do is that with Texas Instruments, you're going to want to watch how that comes into the $40 level, because that's the first one that let it down. That's probably going to be the first one that will bounce. That'll give you a good indication of the weakness in Micron. Do you see what I'm saying? Because if you start seeing Texas Instrument come into that $40 level with volume contract, and then get ready to close that shot on Micron, because they all like trading together. Do you know what I'm saying?
I'm sorry, you're saying Texas Instrument when it hits 40?
Yeah. Because what you have there, it led the semiconductors on the way down, okay? Yep. It led them on the way down. It looks like it has about 3 more points to go. And it looks like it should have some support there. So if it cuts through the 40, great. You can stay in the shot. If it doesn't, then get ready to close it, baby.
Fantastic. Thanks, Tom.
Have a great one, man. Have a safe one. You stay right there, folks. I'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish down 24. NASDAQ was up 2. S&Ps are up 2.5. Volatility is here and here in spades. After the closeout here, you had Google come out with numbers, folks. Google closed at 536. It is traded as low as, I've seen it as low as 505. It is 522 right now. Numbers on Google go like this. They missed their numbers by about 20 cents. The Estimate was $6.53. They made $6.35. That's the bottom line. Top line estimate, $13.1 billion was the estimate. They made $13.17. Well, I can tell you this, though. I just saw something come across the tape that is really bizarre. And what it is that one of their executives was talking about that they are doing, they have, here's the quote. This is not going to be good for Google, folks. This is not what analysts want to hear. Google executives say remarkable momentum in their non-ad business. The ad business for Google, folks, is their biggest business, and analysts in general, okay, you know, spread-wise, all of the above, that's what you want to see go up astronomically. When we were just talking with John from Winchester, we were talking about Micron, SanDisk, SNDK. Now, SanDisk was only down 50 cents when it came out with its numbers. Right now, it's down $3.31. SanDisk closed at $85.31. It's trading right now at 82, and this is going to put pressure. And I think what you have here, well, here, let's go look at SanDisk first. So SanDisk is off a high of 115. Now you're at 82. We bring this back a bit, and we take a look at it, and SanDisk has a long way to go down. I mean, SanDisk wants to trade into 63. What may have happened here, and SanDisk made their numbers, by the way, okay? They made their numbers. AMD, and this is what may be rocking this boat right now. AMD just come out. Advanced Micro, that's closed at 262. That's trading 251. Not that's a lot. It certainly isn't. AMD, however, has already got chopped in half. You take a look at AMD. You know, AMD on, let's see, was in August was 432. You know, that got chopped in half. And what's happening with AMD, what they're announcing, AMD sales, Advanced Micro struggling to compete with Intel and personal computer processors, gave sales forecasts that missed analyst estimates and said it's cutting 7% of its workforce. So bottom line is that chip business is in trouble right now and going lower. After the close out here, the NASDAQ futures went south as soon as Google came out with their numbers. And if you do go over and we look at Google again, what Google wants to test, folks, okay, you're at 536. There's a high volume low out here, hanging out here at 505. I expect that baby's going to get tested tomorrow. What should, you know, where Google has some support, and what would have to happen is you have to have monster volume, is 508.22. That's the number. And where the 508 comes in is that's in October when they come out with their numbers. Google went up $75. It went from 433 up to 508. You know, so as that comes down, you know, if you come down and let's see. So thus far, well, one day left, we're coming down with 12.9 million, and for the week, it did 20 million. Now, Google can certainly do 7 million shares tomorrow, so that would mean that it's going into a high volume spike bar with volume. And if that's what you get, then that's going to be, you know, a different ball game. That would mean that you can go to the bottom of that bar. You know, coming into the market tomorrow, what I expect you're going to see out here is this, okay? So if we take it, I'm going to use the SPY because I know everyone, you know, has equities quotes, okay? So if you look at the SPY, what we had today, the low of the SPY was 182.89. Yesterday, the low was out here of 181.91. Now, I don't expect we're going to go break out those lows tomorrow. What I do expect, however, is that you're going to get pretty close to them. You're going to, you know, we can get to the low being the 181.92. You can get into about 182.89, which is pretty low. What I expect you more than likely, well, here, I'll set up the bounce scenario. The bounce scenario would be that you get down into those levels, and you're down into them, and the volume is contracting. The non-bounce scenario is that, of course, you're coming down with volume, and it's setting up a much larger ABC structure on the way down. Thus far, folks, what we have set up is a 199-point A to B. And, you know, guess what? Whatever bounce we have, you know, we'll see whether that sets up. But as we've been talking about that February 5th benchmark for quite a while, the bottom line is that, you know, we're almost at it. It's going to
I suspect go after it, and more than likely we're going to see that go after it in the next 3-4 weeks. The bottom of that benchmark is 1737. And what you have, which, you know, as soon as we start breaking, what you have that's game out here, and this is real problematic, there's no doubt, is that 1343. And if we run to that 1343, folks, okay, what you're going to see there, that 71421, yeah, that would be about a 38% retracement. Now check this out. This is what you absolutely have to wrap your head around. A 0.382 retracement is absolutely a normal retracement in a market that has gone up tremendously. That's the first part. Second part, for all you bulls out here, well, guess what? A 0.382 retracement, if that's all it does, is a normal retracement even in a bull market, okay? So it's important to understand percentages and retracements in the aspect of how long the leg is. And in this particular case, the leg has been dramatic. You know, so my point is don't give it back, folks, okay? Because a 0.382 retracement, because we've gone up so dramatically, is a give back of huge amounts of money. All you have to do is put a stop in. That's all you have to do. And then turn off the screen, you know, because if you don't put the stop in, you don't want to be in the situation that saying, whether it's months from now, that why didn't I put the stop in? Because, in fact, you know, it went lower, but it went dramatically lower. Just put the stop in, folks, you know. And always remember that if you go down 50%, you have to go up 100% just to go to break even again, you know. And I suspect most of you have been around long enough to realize that corrections inside the marketplace are normal. What has happened, and all I heard this morning again on all the financial stations, is that, you know, maybe we'll get a 10% correction. It's like these people are on crack. A 10% correction, that's a normal deal, folks. You stay right there. Our man, Mr. Andy Hex, coming up next. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there for Andy. Come on right back. He's coming right back.